Here we go. Good morning, good afternoon, good evening, ladies and gentlemen. Welcome back to the stream. This stream kind of came to me yesterday, and I just thought, because I keep on receiving all of these questions, and they're all very, very basic questions. And I thought I need to get back to the basics with everybody a little bit, because the topics that I generally talk about on my channel are very advanced. They're very, not for somebody who has just got into trading, or even that has just got into this style of trading. They tend to lean more towards the advanced side. So I wanted to do this stream live with everyone so that not only as I go through the basics, it can help you all to understand the weekly templates better. And for those of you who have been in this style of trading for a while, later on in the stream, I am going to get into those topics. But we're going to start out the stream today. I've got a list of topics here in front of me that I'm going to go over. And before we get into any of those things, I need to make a reminder for you all that I am not a financial advisor. This is for educational purposes only. The information on this channel is provided for education, informational purposes only. Feel free to pause this stream, read through this, so that way you know this is not any sort of financial advice. Fantastic. So, we're going to start at the very beginning of the understanding of certain topics, all right? I'm going to go through and show you all the different ways that I personally have been trading this style of trading. For all of you who don't know, or maybe you're just now watching this video, maybe later on, and you don't know who I am a Stacey Burke style of trader. He is the one who I learned from. I learned probably about 70% of the information from, and then I have a mix in with sort of market structure from ICT, and then a lot of the strategy comes also from Beat the Market Maker, or the understanding of market maker style of patterns comes from Steve Morrow. So that's a little bit of a backstory about my education. But now we're going to get into the basics. Let's go all the way back to the basics of the strategy in general. So we're going to start off with timing. All right, we're going to start off with timing because I get all of these questions about this specific topic. Number one, when does the day start? This is a 1 hour chart, but it really doesn't matter. If you actually just pull up your TradingView indicator here and you get this session breaks, you turn that on. The very first candle that prints on the right side of that candle, that is the beginning of my day. On the last candle that comes into the left of that dotted line is the end of my day. And then I start my analysis from the left to right, essentially. So let's talk about the session windows and what they mean. So I'm going to pull up my pips of profit indicator here, and it's going to give me all of my timing windows. And I'm going to go down to a lower time frame so I can show those to you all. And I'm going to explain the meaning of what these sessions are. So in the beginning, you have 8 p.m. Eastern time until 11 p.m. Eastern time. That is the Asian session. Then you have 2 a.m. to 5 a.m. That is the London session. And then you have 8 a.m. until 11 a.m. and that is the New York session. Now, later on in this, when we get to the opening range and initial balance portion of this webinar, I'm going to talk about those things. But if you're here right now and you at any point feel like you have questions as I go through this, please make sure that you're asking. I'd be more than happy to answer them. I'm always looking over here at my little thing, and as I look over here to read questions, I'm going to do my best to talk in the mic so you can hear them. Is the course designed for advanced or beginners? My course on my website is from beginners to advanced. It's crawl, walk, run, so it starts at the beginning. Okay, so let's look at the Asian session right here. The Asian session is the first session within the day, and that can provide you with the opening range essentially for the day. Steve Morrow talks about having the Asian range as the first session and being sort of guidance to find good setups throughout the day. So when you're looking at the day itself, that can provide you with a lot of information. London being the second session within the day, that is going to be your initial balance for the day. So if London breaks out of Asia's range and stays broken out, that gives you good reference or good information about what could be happening within the day coming into the New York session. So when the New York session starts, you can start to develop a thesis about the day. But you should already have one based off of a larger setup, and that's what we're going to be getting into as we continue through this video. So my goal as a trader, when I'm looking at just the day itself, is going to be to try and trade from the absolute extremes of the day. So I am looking to trade from the low of the day if I have a preconceived idea that I'm looking for a buy low setup, and I am looking to sell from the high of the day if I am looking for a sell high setup. One of the things I used to really struggle with was I'm at the high of the day, so I am just going to sell. Now, that can become a big issue if you do not have an actual setup on the day that indicates to you that you should be selling high within the day. Because if this market is coming off of the low of the day or the low of the week and then breaking out and going higher and higher and higher, you might be in some sort of range expansion in an up-moving market. So when you try to sell high within the day, let's say like you're up here and you want to sell high, or even up here, like obviously this went down. This is probably a terrible example to use, but let's say that you want to sell high within the day, but you're selling high in the day in an up-moving market. You might not get the move that you would expect compared to if you were to sell at the low of the day or the low of the session at a certain time of the day. That will allow the market to actually have been set up properly for that large explosive move that you're expecting. So that kind of comes back to, now we need to come back to, real quick, I just want to talk a little bit about structure. So we've gone over timing, and we're going to come back to timing a little bit later in a more advanced way, but just for the basics, the timing and the sessions. These sessions are built as a 3-hour sort of window. So these sessions, you have the first hour trades. Whenever I refer to the first hour, I am referring to from 8 o'clock to 9 within the New York session. And of course, the other sessions have their 3-hour window as well. And then from 9 to 10, and then from 10 to 11. Within that 3-hour window, that gives me the ability to tell a story about what is happening and then what could happen based off of the actual setup that I am trading. And I am gauging and I am looking at structure to identify the best opportunity that I can. So like even here, if I said that, for example, today is a buy low opportunity because we are in a large up-moving market on this pair. We're in a large breakout sort of week, and I want to buy at the low of the day. I would come back to structure to say, okay, well, what do I do next? Well, that's when I come down to the lower time frames, and once I get down to that level, I am going to wait for the 1-minute chart to go from a downtrend and get back to an uptrend. So my rules for structure, that's what I want to talk about. My rules for structure allow me to get in at the best opportune moment instead of being a part of what I would call, and what Stacey calls, the first mouse. Because a lot of people get in too early, they've got the direction right, but they have timed the trade wrong, and then it stop hunts against them. It sends you into tilt, and you start to feel kind of a little bit crazy, right? So my ideas with structure is that lower lows and lower highs. I need to tell you all the rules for this. So let's look at this little down leg over here. And I'm actually just going to start over here to make it a little bit easier or more simple on myself. So let's say that this was a higher high, and then this was now a lower low. So I'll start there, and then I'll explain the rules for structure real quick. Now, structure can be viewed on any time frame. I'm doing this on the 1-minute time frame, but this does not limit the ability to view structure in this way just to the 1 minute. This just helps me to stay patient on the 1-minute chart and allow me to actually let the market set up properly and ready to be an explosive move instead of just trying to get in a little bit too early, and then you have to sit through consolidation and things like that and draw down. All right, so this lower low and then the lower highs that are put in place. So this lower low here and then the lower low here. So we're making lower lows and lower highs. So at this point, this low they put down here, one of my rules for structure is that whenever a new extreme is formed, the previous extreme is validated. So for example, this lower low right here would have validated this high as the actual swing high. My next rule is that a 2-candle pullback in a down move allows me to draw a level. All right. So as we continue to make lower lows and lower highs, then they break structure back up to the upside, now validating this lower low. All right. As this continues, you see that they are now trading back up into the lower or into that high, but that's no big deal. I promise you this is going to make sense here in a second. So if the market at the beginning of the session goes back into a downtrend, they are dumping into the low of the session. That is perfectly okay. We have very strong structural levels from earlier in the day, but we're not going to talk about that. I just want to talk about the rules. So the lower low that they put in place over here now validates this as a swing high because they went lower. All right, there's no 2-candle pullback in this instance until right here. So this is where I would draw my line. And then now you can see that they are in a consolidation down at the low of the day. One of the things that Stacey talks about, and one of the things that he talks about saying, I think Peter Brandt, patterns within patterns and just horizontal structures, this whole strategy is based mainly off of rectangles and horizontal structures, right? So this lower low, lower high, what I would personally be waiting for is this high to break to the upside before I'm allowed to even look for a trade. Why do I do this? Because the market is consolidating in a downtrend, and I want to make sure that the structure is now shifting back up towards the upside. So how do I do this? People say that the 1-minute chart is noisy and all these things, but remember I said this was my high and this is my low, and I said that, hey, this is a buy low sort of day, and I'm just waiting for that to confirm. What I would do is I would wait for this level here to break into an uptrend. So this would be a break in structure. And then soon after that, I wait for a 3-push pullback. All right, so that 3-push pullback, I look for different sorts of 3-push variations, which we're going to get into later in the stream. And I've got a slideshow that makes this a little bit more structured. But this is all a part of my entry criteria, but has nothing to do with actual larger setups. So I want to come back to what do I look for as far as like certain patterns? What are the patterns that I'm looking for in order to identify the best probable setups? So like I said, Stacey talks about horizontal structure and things like that. You can see the rectangle down low where they built a consolidation within a consolidation. Okay, so even though this is not technically my structural high, they have still built a consolidation or a box at the low of the day. Even though, like I said, this was my structural high, the one that I'm actually using as reference for me to enter my trade or start looking for my trade, the rectangles down low or up high is going to give you very important and valid information about where volume is caught, where volume is trapped, and if the market goes into breakout mode in the other direction. For example, we were going into consolidations, rectangles, and breaking down continuously, except now they have gone into a rectangle and broke out back up to the upside, done the same thing again, and then continue to do so. So I am now in breakout mode in the other direction. Even though that is not a part of my entry criteria, the things that I look for entry, it's still good, valid information to understand the patterns within the patterns, the structure within the structure, in order to give yourself good, valid trading setups or good entries. What I'm talking about is the entries, right? The instance where you see the 3 pushes down in a W and you get in and it immediately goes vertical in the direction that you want it to go. Instead of having to sit through a pullback and sit through consolidation or sit through all of this, you're instantly in the money once you click that button. Those are the types of trades that I'm trying to find and trying to enter in on. All right, so structure. Let's continue to go through, and I'm going to maintain my structure idea for a little bit, and I'm not going to talk about setups. I'm not going to talk about anything other than identifying rectangles, identifying structure. I'm not talking about identifying swing highs and lows. I am identifying consolidations and viewing structure at the high and the low of the current week. So let's go to this so we can actually see the week's days down here at the bottom. Okay. So if we're identifying structure and consolidations and things like that, every single day that forms when you have a previous day's high and a previous day's low is building a box. That is your structure, your internal levels, or your range that you have to start with when you start the day. And then you have the previous day's range as well, because the market has continuously created boxes and has either, as Stacey says, the market only does three things, right? It's either going to build a box and stay inside of that box, basically stay inside of a trading range, or it is going to break out, pull back, and begin to trend, or it is going to break out, fail, and reverse, and that is because 80% of breakouts fail, all right? So Monday, doesn't matter. I'm not going to worry about that. So we have a box for Monday. Now you can see that as the week continues to progress, they are going to attempt to break out of that box and either succeed or they are going to continue to fail. Notice how they have gone back up to the high of the current week and gone sideways in a consolidation and then broke back down. And you can actually see on this 1 hour chart, you can see the rectangles that they are forming on these higher time frames, building a box and continuously breaking out down back towards the low of the current week. You can see that they've continued to do that here. And then you can see that they've gone down to the low of the current week, hit the low of the current week, built a box, and then now they have reversed. So this is the example of a trend where they break out of a consolidation or a box. They build a new box. They break out of that box. They build a new box. They break out of that box, and they keep doing that over and over again. Now they're going to continue to do that back up towards the upside. They've gone up. They've put in a box right here. Oh, that's not a line. And then they continue to trend outside of these horizontal structures, and they continue to do that over and over and over again until they don't want to do that anymore. And you can see the kind of the overlap in this one where they built a smaller box at the beginning of the day, broke out, pulled back. Now we have a larger box, and then it breaks out and continues to trend. There's the new box. They've built it over the course of multiple hours. They break out, and then instead of breaking out, pulling back, and continuing, they have now broke out and failed. So why on earth am I just going through my chart and identifying these horizontal structures? I promise you this webinar that I go through is going to be crawl, walk, run. I hit some slightly advanced topics in the beginning, trying not to get off track, but I've pulled myself back in, and we are now just talking about boxes, rectangles, breakout, pullback, continue, the three things that markets do. So identifying these structures is obviously very, very important. The next thing you can do is identify the important areas of the chart that you can look for these structures, the areas of the chart where these structures are most important, so that when you come into your day, you've identified them and you say, hey, this is my current rectangle, and I am now looking for this to do one of three things. I am looking for it to either break out and start a trend, break out and reverse, or just stay inside of that box, inside of a trading range, and I will probably avoid it. All right. So do you do the analysis on the 1 hour 15, enter on the 1 minute chart? The 1 hour helps you to identify structure very easily, very quickly, and see the overall direction of the market very quickly and easily. I'm not necessarily using it for my analysis. I do most of my analysis on the 15-minute chart. But if you are struggling to see these rectangles and these consolidations on the 15-minute chart, going to the 1 hour chart will make it very, very easy for you. All right. Now, my entries are all on the 1 minute chart. But like I said, the 15-minute and the 1 hour do absolutely help you with your analysis. But regardless of time frame, there are going to be some constants. So we've already identified the times of the day that we're looking to trade. Those are my timing windows. Those are my working sessions, the time that I actually come to the screen in order to take my trade. Me personally, I'm only trading one session out of the day, and I'm actually only looking to trade about 1 hour out of that session, so that way I am minimizing the amount of time I have at the screen in order to trade. All right, so we're going to start on a Monday. Monday is the opening range for the current week. That gives us our initial range for the week. And you're going to notice some similarities to what I just said about the Asian range being the first session and the opening range for the day. Monday is the opening range for the current week. So at this point, we already have good set in stone valid levels that we're going to look at coming into Tuesday and Wednesday. So on Tuesday, the idea is that either we are going to have a breakout of Monday, or we are going to have a failed breakout of Monday, or we are going to stay inside of Monday, and that would turn into an inside day on Tuesday. On Tuesday, they extend the high. They expand the range up there. So this is now our initial balance. A plus B equals C. Opening range plus initial balance equals basically your opening range and initial balance. It's going to be Monday, opening range. Tuesday, they've extended the range, initial balance. If they would have extended on both sides, then I would have extended those range on both sides, and that would give you your initial balance. So think about what I've just said. We went from a Tuesday that is traded off of the high of the week and then traded back down to the low of the current week. Failed breakout on Tuesday, and this is where I start to develop ideas about what to look for on Wednesday. So if I have a failed breakout on a Tuesday, that breakout has failed in my understanding of structure and liquidity, the understanding that if they hit the stops on one side of a range, a lot of times they will go and hit the stops on the other side of a range. So I'm talking about the fact that Tuesday traded above Monday's high and then closed back down here on the inside. The fact that this breakout has potentially failed and came back down and closed the day. You can see my daily separator. In fact, I'm going to make this thicker so everyone can see. One of the setups that I look for on a Wednesday is to allow the market to basically continue this trend, breaking out of structures to trade back down through and find the low of the week, the low of the opening range. So like here on this day, my trade setup would have taken place in the New York or in the London session. Once they have traded through the low of the week, that setup has already been completed. And you can actually, if I were to pull up my Monday, Tuesday, Wednesday template here, on my tips and tricks slide, on this slide here, you can see that I have a list of things that I look for based off of the opening range. One of those things is if Tuesday hits both sides of the opening range, that's going to be like a day zero. Market closed as a failed breakout on Tuesday, probability of reaching the other end of the opening range increase significantly. So that's exactly what I am referring to when I said there was a failed breakout on Tuesday and now it might reach the other side of the range. So that's one of the trade setups that I looked for. However, once they hit that level at the low of the current week, now we have returned to understanding timing, understanding the low of the day, and understanding that once we break out and the New York session opens up outside of Monday's range, they have opened up. Somebody just asked me to explain in balance and out of balance. They open up the session outside of Monday's opening range. They are opening up the session outside of balance. And Stacey refers this and says that, and I think this is like Dalton's concept, right? That a market that opens up outside of balance can lead to large moves and things like that. So you can see that they're opening up at the low of the day outside of Monday's opening range. So when you're talking about finding trades from the outer edge of the extremes, this is an example of a low of day long trade based off of a rectangular structure at the low of the day on a Wednesday, opening up out of balance, opening up as a dump and then a pump. So let's go down to the, actually, I want to look at this example. We'll go down to the 1 minute chart and see if we can find my entry criteria playing out, which is not difficult to understand, but I'm going to try my best not to make it complicated. So opening up outside of balance on a Wednesday or at the low of the day, we're at the low of the week. And that's why I always emphasize if we're at the low of the week, be very careful about trading back into the low of the week because of things like this. If I'm at the outer extreme taking a trend trade lower, that market better be in a strong trend. And we're going to look at some strong trending markets here in a second to explain those templates a bit better. So we'll come down to the 1 minute chart and look at what this day has done. And you can see now, looking at this chart, that you could the downtrend is very obvious. We're making lower lows and lower highs coming into the session. 8 o'clock opened up right here. outside of Monday's range, and then lower lows and lower highs back down into that level. So this, like, coming into this new hour, this was the low, this was the high, and then you get a lower low and then a higher high. So this lower low right here, and then the higher high, you can see the smaller rectangle now within a larger rectangle. I marked off this larger rectangle on a 1 hour chart, but now down on a 1 minute chart, you can see the exact same patterns forming on that 1 minute chart that we just looked at on the 1 hour chart. See the small rectangle now at the low of the day, lower lows and lower highs, rectangle, and it breaks out into a higher high. So now this gives me an opportunity to look for 3 pushes back down into the low and a W engulfment to allow me to take that long trade back towards the high of the day or the high of the session, or even maybe the high of a previous session or something like that. All right, but it's all based off of these rectangles and my understanding of structure. And once they go to the outside or an extreme, think about it like this. I just said that breakout, fail, breakout trend, or stay in a trading range. If this breakout were to fail, again, now at the low of the week, we have this range that they can go back up to retest the 50% or even go back towards the high of the week ultimately. All right, but these failed breakouts at the high and low of the current week are what is going to drive the market into a large, strong parabolic move in the other direction. And that is one way you can trade this, all right? So I've talked about structure. I've talked about rectangles. I've talked about market structure, identifying highs and identifying lows, and we've talked about timing thus far. I'm going to pause here. Does anybody have any questions, comments, or concerns up to this point? Because I want this to be as interactive as possible. I want you all to question. I want you all to ask me things. I'm more than happy to answer. This is Crawl, Walk, Run. I'm still at the very beginning. We are still just understanding rectangles and highs and higher highs, higher lows. And I'm trying to start to get into and lean into levels. How's everyone doing? I'm going to give myself a pause here. I've been running my mouth for 30 minutes straight. I'm not seeing any questions. I'm going to keep going until one of them pops up. If they don't pop up, no big deal. Real quick, while I'm saying, kind of taking this little pause here, there's 82 people in the stream right now. That is fantastic, and I'm really happy to have you all here. But there's only 40 likes. If you all could just do me a quick favor, it's one of the few things in this world that is free. Do me a favor, hit that like button. I'd greatly appreciate it. Thank you. Okay, so structure, rectangles, and now I'm going to talk a little bit about M's and W's. I look for certain M's and W's at specific locations of the chart. I am looking for M's and W's at either the high or, I don't know what that says. Do the YouTube business. I don't know what that means, but we're going to keep going. Oh, here we go. Here's Stacey said yesterday, price will usually return. Yep, exactly. 9:30. On the hourly, the market is making lower lows and lower highs. Is that not dangerous? I'm going to talk about that here in a second. So you always wait for Monday's range to play out before you even take a trade. Good morning to you, and no. I'm going to talk about something a little bit later today. Means give a like. Oh, yes, Dustin, I do appreciate that. I was just confused is all. Go ahead. Good stuff. Can you show your fib settings for 100% expansion? Yes, real quick. I'll show that, and then I'm going to continue before I lose track of what I'm talking about. So here's my fib settings. It's not a Fibonacci. It's actually just set to one full expansion of ranges. So like if I measure from area to area, it's going to give me equal distant expansions of that range. Here's the settings real quick. Let's see here. Okay. I need to continue or else you're going to see me go off on a tangent and into a ramble. So let's talk about M's and W's at the high and the low of the day. There's a few variations that we can look for. Okay. M's and W's allow me to find lower rectangles or higher rectangles that eventually become broken out of and start trending in that direction. So let's say I have a sell or a buy low thesis like down here, right? There's a few variations or versions of M's and W's that can be observed. There is going to be the extended version where you have a low, a high, a lower low, and then a higher high. That would be a W. And if you think about it, this is going to form, although this is a double bottom or a W, this is actually forming a bit of a rectangle down low, right? So if you kind of visualize it like this, you can actually see that exact thing has happened down here. One of the other versions of a W is going to come in the form of a shortened W, where you get lower low, higher low, and then explosive move. So this is still a variation of a W, but instead of a rectangle, this is actually going to come in the appearance of more of a ascending triangle. So you might get a big spike up and then 3 pushes back down into the low, giving you that W, and then the explosive move, and later you'll look at it and go, oh, wow, that was an ascending triangle, and it exploded, and I missed the move. But that is the shortened W, and the same thing can occur at the high. So if I were to flip this over and show you an inverted version, this would just become the M. This would be a extended M, where they make a higher high, higher high, higher low, higher high, and then the lower low. And then the higher high, higher low, lower high, lower low. And that would become a descending triangle, and then this just turns into a bit of a rectangle at the high, so you can gauge that consolidation a bit better. Now, these come in a few different variations as well, and they're very easy to see. Oh boy, I need to flip this chart over before I lose my mind. There we go. So this one is obvious, right? Down, up, down, and then the engulfment back up. You can very easily see the W. Some of the ones that you may or may not know about that are a bit trickier to see can be things like this, where you get down, up, a down candle, and then an up. This turns into sort of that ascending triangle appearance, but this is a shortened M to allow this to go back in that direction. And the same thing comes up here. You can see the up, down, up, and then the engulfment. You can see the descending closes, and then the rectangle up high. This would be like the neckline right here. But this up, down is basically a micro M at the high of the current day, and in this case, the high of the current week. And this is on a 1-hour chart. All right. So that's all really great information, things to look for. You can even see this micro W here, down, up, down, and then the engulfment. And you can tell that this probably created a bit of a rectangle down at the low of the current day for that move up. So you got a rectangle at the low of the day for the move up, and then you have a rectangle at the high of the day back for the move down. And that all comes back to being able to identify these consolidations and gauge and identify these structures. We haven't even got into trading setups yet. I just want to focus on structure and important higher time frame patterns that you're looking for on a lower time frame to be able to see them on a lower time frame. Let's see. Help locate the M formation on NASDAQ yesterday. I was on... on NASDAQ. Hey, we'll go back and I'll make that specific task for later. All right, so identifying structure, the rectangles, the M's, the W's at the high and the low of the day, the high and the low of the current week, the timing window, and now we are going to move along. I want to start giving you all the actual important levels for the week, all right? Now, when you come into Monday, somebody just asked me, well, what range is important on Monday? Or do you even have a trade set up on Monday? How do you trade on Monday? That is where last week's range becomes very important. So this is, if you're taking notes right now and you're like, what levels are important? I'm about to list them off one by one. I'm just going to list them off, and then I'm going to come back and I'm going to talk about them. Okay, so on Monday, what level is important? Number 1, Friday's high and Friday's low is important. Friday, or the previous week's high and the previous week's low is important on a Monday. I'm specifically talking about Monday right now. Okay. So the previous week's high and previous week's low is important. Now, when I come into Monday, I can use Friday's range and I can use the previous week's high and previous week's low as my box. It provides me the overall range, the outer extremes that I'm looking at. This is the massive range, right? But I do have Friday's range as my reference point on a Monday. Now, on Monday, I have, once the day closes, once the day ends, I have the opening range, or the market has created the initial range for the week, right? So now I can mark off those levels. Again, if you're taking notes, Monday's high, Monday's low. Then on Tuesday, after Tuesday trades, Monday's range remains the same. Monday's range is going to last all the way throughout the week. The opening range remains the opening range. However, if Tuesday extends the range, now we have the initial balance. So that level becomes important when you come into Wednesday. When you're trying to develop a thesis for Wednesday, the combination of Monday and Tuesday leading into Wednesday is important. So those are the levels coming into Wednesday that I am looking at. I am looking at Monday's range. I am looking at the previous week's high and previous week's low to gauge if one of those levels has been hit. And then I am looking on Wednesday in order to trade in two different ways. Number one, Stacey says this all the time. There's only two types of trades, a trend trade or a reversal, and nothing could be closer to the truth or the truth in general. So if we've talked about structure, and this market is currently going down, we're making lower lows and lower highs in the overall market right now. And it continuously is breaking out of structure, making lower lows and lower highs and going into consolidation and breaking down further. Do I really want to make a counter-directional trend move in the middle of this range? No. Stacey talks about this where he says that he trades from the inside, but they're trend trades. That's one of the biggest things that I ever picked up from him was he's trading from the inside, but as a trend trade in the direction that the market is already moving. And then once you get to the outside, if it turns into a strongly trending breaking out market, then you can continue to trade in a trending style in that direction. But that is for opening range breakouts. Monday, Tuesday breaks out on the outside of the opening range and begins to trend strongly. Coming into Wednesday, there might be an opportunity for trend trades because the market is trending strongly. Opening range breakout pullback, and maybe continuation on Wednesday. Coming back to my tips and tricks slide. So market closed on the outside of the opening range on Tuesday. Probability of Wednesday continuation increases significantly. That is what I'm referring to. I am referring to opening range breakouts on a Tuesday. Tuesday closes, and you can find those strong trending moves. But if the market fails on a Tuesday and is continuously going back with the trend, making lower lows and lower highs, and going into consolidation and breaking down continuously, like for example, over here in the London window, they break out of Asia's range and start trending back down towards the low of the week. Do I really want to just take a long trade in the direction or a reversal trade in the middle of a range without them going to the outside? No, I do not. What I want, if I am going to trade on the outside, which is one of the things that, again, that Stacey advocates for, is if you're trading on the outside and the market becomes out of balance, that is where breakout, pullback, continuation, or breakout, and you can find large reversal opportunities when you are on the outside. And on the outside of the opening range, the market opens up. Outside of the opening range, you're opening up out of balance. All right, so this is just one example, and I'm going to be going through more examples here soon. So now that Wednesday has traded, they've extended basically the range now on Wednesdays. You still have all of your important levels, Monday, Tuesday, and Wednesday. Boy, I'm failing. I am failing miserably. There we go. So Monday, Tuesday, and Wednesday, and annotating and making sure that you still know, hey, Tuesday was a failed breakout, and now Wednesday was a failed breakout. Because these ranges are expanding, which means that if we are taking this trend trade now, we might be taking a trend trade based off the fact that the opening range, there's been a failed breakout now at the low of the week, and now we might be looking for them to consolidate and then continue that trend higher. Oh boy, what have I done? I didn't mean to do that. Stop that. There we go. Okay, so Now noticing they broke out, they had a failed breakout at the low of the week, and we continued the process over again, where they've gone again back into consolidation on the following day, breakout, pullback, and then continuation once again. So now we are looking for buy low opportunities on Thursday, and you can see that we've come off the low of the week, not counter trending something that comes off of the low or the high of the week, and it goes back up through the high of the week and closes. This closed as a opening range breakout, and then again, now we are trading from the extremes once again. Consolidation, that gives an opportunity in Asia for the vertical move. But then again, where we have opened at 9 o'clock, they have gone back to the outside, but 9:30 opens up, on the outside of the opening range and things like that. So did this on Euro, USD, and GBP, JPY on the reversal. I'm going to have to go to specific pairs in a minute. All I am doing right now is advocating for the important levels. All right, opening range, initial balance. Understanding that if a move is coming off of the high of the week, they are searching for something. And I don't want to just trade expecting some kind of reversal from this point to do something like this. I want to see them hit the extremes, hit the stops, trigger breakouts, all those different things, and then look for my trade. And if I don't wait for them to go to the outside, this is very important. If I do not wait for them to go to the outside, I am going to take the trend trade in the direction of the current continuous breakout. So if I have a trend trade opportunity, they break out, let's say I was trading London, I'm going to trade in the direction of this down move until one of those levels is broken. And if that setup does present, of course. Okay. So opening range, initial balance, Wednesday trade. One of the things that Stacey's always reiterating is that Monday, Tuesday, Wednesday, day 1, day 2, day 3. Now you see me talk about, I say the same exact thing, just a slightly different way. And I also refer to the 3-day cycle. 3-day cycle was some of his earlier teachings where he did not always refer to Monday, Tuesday, Wednesday as day 1, 2, and 3. Sometimes he would refer to Friday as day 1, Monday is day 2, and Tuesday is day 3, and that was based off of the 3-day cycle, and that is where I developed a process for using the 3-day cycle. Now, the weekly templates, Monday, Tuesday, Wednesday resets, and then Wednesday, Thursday, Friday templates. Now we are coming back once again to this tips and tricks slide. All right, so on a Wednesday, actually, you know what? I'm going to pause here for a second. I'm going to look over. Great question. Think of your entry as previous closing price. Yeah, so later in this webinar today, I'm actually going to talk about timing your trades. Once we establish what important levels are, or what the important levels are, I'm going to go into more specific, like, hey, this is going to be like where my entry would be and why. And we'll find some trades where I'm going to go through and backtest and basically find some trades where we were trading in the middle in continuation with the already pre-existing move. So either an uptrend or a downtrend from either the high or the low of the day. And then I'll backtest some instances where they go to the outside and there's a strong reversal, because that's the only two trades that we are truly searching for, is either a trend trade in the direction of the already existing move, or we are looking for a reversal, but once we are looking for reversals at the outer extremes of the week. All right. So let's go back, and I'm going to find some more examples because I've just been using that one, and it really doesn't matter. I can start on any week. So we can look at Friday's range. Friday was the previous day leading into Monday, and that gives us our reference points for Monday. So if they break out on a Monday and you come to the screen and they've already broken out coming into your session, there's the consolidation on a higher time frame. But now if you were to go down on a lower time frame, actually I can probably mark this off from the wicks, you'll notice that this is going to be a rectangle, and then it's continuing this down move on that Monday. They did not trigger a previous weekly level on this Monday. They could potentially be reaching for that level. So you're not really looking to counter trend this on a Monday, especially when it's a strong breakout kind of day, because it's breaking out of Friday's range, pulling back and continuing. So you're looking to go in line with the already existing trend trade direction of that breakout. But then Monday is the beginning of our new week. So now we come into a new important level. We have Monday's high and Monday's low as reference point for the following day and for the rest of the week. So Monday, Tuesday, and Wednesday, in a Monday, Tuesday, Wednesday template, Monday was a very wide range opening range day. And then Tuesday was an inside day. So if I'm looking to take this trade or look to take a trade on the following day, I have to understand that I am still completely on the inside of the opening range from Monday and Tuesday, opening range initial balance. There's been no trade setup or sort of opportunity in my mind that I could possibly be looking for unless I am taking a session trade, attempting to trade on Wednesday back through towards the high of the current week in line with the already pre-existing move up, breaking out, making higher highs and higher lows. So Tuesday trades, inside day, they trigger the high of the inside bar and pull back. But here's the thing is now we are in an uptrend currently on this higher time frame. So Monday, Tuesday, Wednesday is traded, and then you restart the whole process. We still have Monday and Tuesday's levels as reference, but in this case, it's just Monday because we still haven't triggered the high of the opening range. Wednesday, Thursday, again, breakout, pullback, and they start the process over again, going back into not necessarily breakout mode, but it is also breakout mode because we have lower consolidations, those rectangles consistently being broken out of, and they are reaching once again back up for the high of the current week. And you can see the persistence of the market to get there, regardless of how many times that they pull back. So Wednesday, Thursday, Friday. And then finally on Friday, now we have reached the outer extremes. We've reached the outside. We are now trading on the outside. We hit previous week's high, and we also hit the current high of the week. 9:30 opens up outside of balance, and then you can see the retracement now back down into the range. So ideally, yes, you could take trend trades in here, low of day trend trade, low of day trend trade, low of day trend trade. You can actually see the parabolic channel here on this as it goes vertical. There's plenty of trend opportunities back through the high of the week because you're trading from the inside in an up-moving market with the understanding that they are reaching back for the high of the week. But then what do you do once you get to the outside and the market opens up outside? So you can see this is 9 o'clock. This was 8 o'clock. So 8 o'clock opening up outside of that range. Now the idea is this breakout pullback continuation, or is this breakout and the breakout fails and goes back for the money on a Friday specifically, more importantly? All right. Super important. So I'm going to go back as I'm going through this. I know I keep talking and rambling. As we've gone through this, we started off with things like session times. We've talked about rectangular structures. We've understood the double bottoms and double tops. We are looking for those specifically at the high and the low of the day and the high and the low of the week. Looking for those rectangular structures to identify which way the market is currently breaking out or if it's in breakout mode. Understanding what levels throughout the week are important. On a Monday, Friday's range and the previous week's range is important. After Monday has traded, Monday's range is important, and we still have the previous week's range as well that is important. Then Tuesday trades. Does Tuesday extend Monday? If it does, Tuesday's levels could be important as a reference point for the rest of the week. And then you get Wednesday trading for a Wednesday parabolic setup if one does present. And then as the week progresses, then you have Wednesday, Thursday, Friday. You're looking at the range of Wednesday in relationship to Monday, Tuesday's range, and then for the rest of the week, developing your thesis as you go. If you make it to the outside of the week's range and there's an opening range breakout where maybe Monday trades as a breakout and then Tuesday continues that breakout, you might be in a strongly trending week. And we can actually go to, I believe it's this current week, if I'm not mistaken. And I could find a good example of opening range breakout. Alrighty then. And they're breaking daily levels all week long. Yes. Yeah. Okay, so this past week on oil was a great example of opening range breakout. So Monday was the opening range. And also we're going to start on Friday. Friday was the previous week's high, and Friday was also just Friday's range, right? So Monday broke out of Friday's range and closed as a breakout. So we can say, hey, Friday closed as a breakout. Awesome. Then we have Monday's opening range. And then Monday, Tuesday, Wednesday. Tuesday was an inside day. And then Wednesday continuing to break out into Thursday. Again, rectangular structures. You can see within here, there was a rectangle down at the low of Tuesday that turned into a smaller rectangle. I guess it would be a larger rectangle on top. And then that continues to break out. And then this turns into a rectangle and that continues to break out. And the same thing continues to happen over and over and over again. And I kind of think that I haven't done a great job of explaining this in previous videos. This visualizing the rectangles and things like that. I've done a terrible job of doing that. So I'm trying to kind of rectify that now. But if you go back and watch Stacey's earlier videos in his earlier playlist, that's like one of the very first videos that he has was about horizontal and rectangular structures. And that was like the first video I ever watched from him. So understanding those consolidations and those breakouts is very, very important for not getting caught trying to trade direction or trying to trade in the wrong direction in general and actually maintaining looking for setups. So anyways, Monday, Tuesday, Wednesday, Monday turned this into kind of a breakout mode, and then they continue that breakout mode coming into Thursday. And you can see now that we are in a strong opening range breakout. Tuesday closed once again or Thursday closed now as an opening range breakout. But earlier in the day, you see Asia, London turning into a nice little rectangle down at the low of the day. Opening range of the day, initial balance of the day breaks out of the opening range for that current day. Asia, London. London breaks out, pulls back, New York, and now we are continuing to do the same, creating rectangles, breaking out and pulling back and going higher and higher and higher. Cam, I'm a bit behind on watching the video live time, but you have... Gazo, awesome. Good stuff. I'm glad this is helping. I am doing my very best to try and explain this in somewhat of a structured nature. I've got a little piece of paper right here to try and keep my thoughts organized before I go off on a tangent about, you know, all kinds of weird stuff. So I'm not gonna do that. All right, so opening range breakout. When you're trying to develop a thesis, if the market is in breakout mode, look, higher highs and higher lows, they continue to do that. There is no reason necessarily to be going short unless your session is opening up on the outside or has gone to the outside. When I say the outside, I am referring to the important levels. Friday, Monday, opening range. For example, like if they are continuing to, I'm going to use this as a kind of a poor quality example. If 9:30 opened up on Wednesday outside of the range, that might be a reason to go short on Wednesday. But that's not what happened. We still opened up on the inside of Monday's opening range, and we are still making higher highs and higher lows and breaking out of smaller patterns within patterns, smaller consolidations within the larger rectangles. We continue to break out of those and trend back up to where the market really wants to go. It is trying to reach for this level, and everything, all of this down movement is just a trap in order to get more money for them to actually go the direction they want to go. Again, I'm starting to scoot into a more advanced topic. We're not going to do that. So structure, right? There was other really great opening range breakouts on, I think, the US dollar, Japanese yen. Yeah, okay, there's one right there. So how many times have you been trying to counter trend something just because you're at the high or just because you're at the low, expecting, hey, this is going to return because it's 3 days of breakouts and things like that, when you're in a very strongly trending market, and the easy trade was just to go with the trend. And I'm going to show you how you can easily identify when you are in breakout mode. Number one way you can tell if you're in breakout mode is if Monday's breakout succeeds out of Friday's range, right? Because this opening range, we have broke out of the previous day's range, created the opening range, and then Tuesday continues to trend. So now Tuesday closes as a confirmed breakout outside of the opening range that we established from Monday. And again, coming back to this slide, opening range, close on the outside of the opening range on a Tuesday, probability of Wednesday continuation increased significantly because we are in breakout mode. Now, I'm going to get into failed breakouts over the course of 2 days here in a second, but there we go. So Monday, Tuesday makes the initial balance. And then at the beginning of the day, Asia creates another rectangle. Asia opening range for the current day, creates the rectangle, breaks out in London, pulls back, and then goes higher. If you've ever done my webinar with me, the private one that I do on my Discord, one of the things that I try to be super duper annoying about is the common trend. Monday, Tuesday breaks out, is in an opening range breakout. Asia makes a higher high. London pulls back. And then there's a New York continuation in a lot of cases because we are in breakout mode. So Monday, Tuesday, Wednesday, there's a trade in on Wednesday for that parabolic long continuation. There's down, up, down, and then there's the engulfment of that W. People say that my engulfments are weird. That's fine. You know, it is what it is. But if I have a middle structure for a W, this is to me an engulfment because they have engulfed the pattern. They have left the box, the lower consolidation, and they have broke out of that pattern. This candle was the engulfment of that lower consolidation or lower W to allow this trade to continue to go higher. And then we get the closing or towards the end of the week's range, right? So Wednesday creates basically the middle of the week, right? This is something that I actually want to bring up is that I learned from all of Stacey's earlier teachings. And in his earlier teachings, he never mentions midpoint range or closing range of the week. That is not something that he referred to. He always referred to on Friday or on Monday, refer to Friday's range and things like that. And on Monday, refer to the previous week's high and low. Some people kind of put me on to the midpoint range and the closing range for the week. And backtesting it over the past couple weeks, you know, I really like it. And I'm going to give him the credit on that, obviously. This is something that he put me onto and that other people have put me onto. So if you are interested in finding more information about midpoint range and the closing range of the week, go over to his channel, Stacey Burke Trading. Fantastic channel. But I just want to give him that shout out before I continue talking so that you understand anytime I refer to midpoint range or closing range of the week, that is not from me. That is from him. All right. Okay, so midpoint range of the week. Why do I like this? Because as this in certain templates, and you have the opening range way down low, and then you have Tuesday's initial balance, sometimes when you are in breakout mode, it can become very difficult in order to find the new and like most important level. How do I trade from the inside back to the outside, or how do I trade from the outside back to the inside if I don't know which levels are the most important to me? So in a Wednesday, Thursday, Friday template, Wednesday's midpoint range, that is the new range that you want to look for or look at coming into Wednesday, Thursday, and Friday. The opening range remains throughout the entire week. Opening range, initial balance, that still remains for the entire week. However, something that I'm going to be implementing, and I have already started implementing into my trading now, is that midpoint and closing range of the week because it is so unbelievably useful. So the midpoint range, you have Monday's high or Wednesday's high and Wednesday's low. How do I trade from the outside? How do I gauge what the trading setup could be? So I could say, well, on Thursday, we have an inside day. They do not hit previous day's high or previous day's low on that Wednesday. But they do create consolidations, once again, that continue to break out and break out and break out, leading into the London window. So Asia creates a range and then breaks out and then goes to the outside right into London. So now they have gone out of balance, outside of the current week's range, specifically on a Friday as well, outside of that range, and then opened the London session. You can see what happens next. Because the market opened up outside of balance, there is a really great reversal trade back down. And then there is no more trades really for that day. They just go back into consolidation to end the day. All right. Let's see. Hey, man, I love the info and how you explain everything, but can you replay and show us how you would use this info to actually take trades throughout the week? DR7. Yes. This is Crawl, Walk, Run. I've got a whole nother hour to explain this. If I just tried to go directly into my entries and how I actually use this, I would start getting comments again about please be more beginner friendly. So I am trying to start more at the beginning, explaining the rectangles, explaining the opening range, and explaining the thought process that actually goes into why I do certain things at certain levels at certain times of the day. And then we are going to get into entries and how I would actually look to take those entries. All right. I promise it's coming. I'm trying to make this 2-hour webinar as crawl, walk, run as I possibly can for anybody who might be a little bit newer to trading or newer to this strategy. I'm going to back up, and it doesn't really matter what pair. I'm just going to select a random week. That looks nice. So Friday's range, again, gauging on Monday what has happened. Friday broke out and closed on the outside of the opening range. Except on Tuesday, instead of going vertical back up to the high, they went into consolidation and broke down. So now we have Monday's range and Friday's range as reference. Here's Monday. They broke the low of Friday. Monday is the opening range, but we have volume trapped at the high of the week above Friday's high and above the previous week's high now. So Monday, Tuesday. Tuesday is the initial balance. Remember, we have those levels in place right now. Those are important levels. This is our range. Monday, Tuesday, and then now coming into Wednesday, this will allow us to build some kind of Monday, Tuesday, Wednesday thesis or idea. So on Wednesday, if a session opens up outside or out of balance, they open up outside of Tuesday's range, that could be a good indication that we are looking for a reversal. So you could see the structure within the structure, the pattern within the pattern. They break down outside of London's range. This is London right here. Goes back into consolidation. Down, up, down, and then there is the engulfment of a W. Once again, back towards the high of the day. This is a rectangle at the low of the current week. This is a smaller rectangle at the low of the current day. This was the low of the day back over here. So this smaller rectangle is a part of a larger rectangle, and this is where you can use range expansion in order to find profit targets and things like that. So you could even use, if you wanted to be more conservative, you could use body to body, something like this. Or you could even, if you're like me, I'm really conservative, and I like to use the smaller consolidations and just take very conservative profits. But on a Wednesday, you can see this nice break to the downside, consolidate at the low of the current week, short squeeze back up through the high. So we can come and we'll look at the rest of the week now. Wednesday, Thursday, Friday. Like I just said, using that midpoint range of the week and also understanding initial balance and opening range, saying that those levels should maintain throughout the entire week. Breakout, pullback, consolidate at the new high of the week. The new high of the week, because it's breakout pullback. They've gone into consolidation and broke back down. Do you think that I want to counter trend something on a Thursday or Friday that's coming off of the high of the current week and breaking down? No. Again, they go back into consolidation, new rectangle, and it continues to break down again. So maybe you're trading in London. London opens up again on the inside of the current range, right? We're opening up on the inside of the initial balance. We're inside of the week's range. I want to trade in the direction to get to the outside, as long as that is already in the direction that we are in breakout mode. If I take a trend trade from the inside, it is in the direction of the already existing breakout. So from inside back to outside. Now we are outside, and New York session opens up outside of balance. Once again, they've created a rectangle, down, up, down, engulfment, 8 o'clock. They've created a rectangle and broke out of that rectangle, pull back, and then continue. This didn't go parabolic as you would hope, but when we're talking about trying to trade direction, don't get caught trying to trade on the outside in that trending direction when the session opens up out of balance. You have to be careful. And that's why like I said, I'm constantly emphasizing not trading into the low of the week and things like that, unless it's this sort of low-hanging fruit trend sort of continuation, trading from the inside of a range back to the outside of a range. All right. So then the process repeats again. Friday's range counts for Monday. The previous week's range is important. Friday, this is also the previous week's low. They've created a rectangle at the low of the day, or at the beginning of the day, excuse me. So you can see the little rectangle here that breaks down and goes back once again. Trend trade from the inside back to the outside on a Monday. Now we're opening up on the outside of the range and continuing to break lower and lower and lower. Monday, opening range. Now we have a new level that is important. It has been established. Market only does three things: breakout, trend, breakout, reverse, or stay in a trading range. Tuesday, trend trade in Asia outside or coming out of consolidation from the inside of the range back to the outside. Trend trade. New sessions open up on the outside of the range and go into consolidation once again. So now we're opening up on the outside of, or out of balance, outside of Monday's opening range. And then here we go again. 9 o'clock, 10 o'clock. You can see the little triple bottom down here where there is sort of an ascending triangle. 10 o'clock, third hour trade, down, up, down, engulfment of the neckline. Oh, nope, just kidding. A market opening up out of balance and wanting to go back into or find value. Again, so now we go back into the consolidation, and Tuesday's breakout outside of Monday has failed. All right, so now we can go back to this slide. Market closed as a failed breakout on Tuesday. Probability of reaching for the other end of the opening range increased significantly. All right, so we'll go back to here, and we'll look for evidence. What is the evidence? I've got my levels in place. Monday, Tuesday. Tuesday was the low of the current week. All the way down here. I have Monday's low, that's the opening range, and I have Monday's high. These are my reference points. You can also use the breakout level from Friday. That's totally fine as well. That is another level that they will tend to go back to. However, we're talking about over here. So let's look at the structure. It all comes back to those rectangles again. They've got a rectangle now at the low, and it goes vertical. So now Asia is in breakout mode for the day. London, again, makes a higher high and pulls back into New York. Dump for the pump back up towards the high of the week. We have another rectangle. They are continuously breaking out of rectangles, making higher highs and higher lows. And I am trading once again, I am trading the trend trade from the inside back towards the outside due to the direction of the continuous structural breakouts and because of the failed breakout at the low of the week. And I do hope that this is starting to resonate. If you've pulled anything from this, it's the specifics about the timing of the day, the session times, the structural rectangles. I really hope that you all paid attention to the M's and the W's, looking at the high and the low of the day and the high and low of the week, the opening range initial balance. And then also, probably one of the more important things that I've said today is if you are taking a trend trade, you are trying to get from the inside back to the outside. And you are doing this in the direction that the market is currently moving strongly. It is breaking out, and we are continuously making higher highs and higher lows, breaking out of rectangles. Dump for a pump, 8 o'clock, vertical move back up through probably these profitable traders from Friday, Monday. Whew, boy, I've been running my mouth again. I'm going to look to my left, and I'm going to ask some questions. And the question is, how's everybody doing? Do you all have questions at this point? Because I've kind of gone over the absolute basics at this point. This is the easiest stuff to understand. This is the easiest parts to know. Now I'm going to get into specific trade setups. I'm going to look and do this exact same backtesting behavior, except once I see profitable trades, I'm going to go down to the lower time frames, identify how you could have got in and why those are the good places to get in from a objective standpoint. All right. If you are new to the channel, ladies and gentlemen, welcome to you. We've got a lot more viewers today than normal, which is fantastic. If you are new here, my name is Cameron. I've been trading now for about 2 years, a little over 2 years, and I was able to, through these teachings and through these understandings, become profitable in about 1 year's time. A little bit over 1 year, and I've been trading full-time profitably for 1 year now. This is by far the best trading style, in my opinion. I'm a bit biased because it's the way that I trade on the market today, and all of that goes to Stacey. And of course, through his teachings, I was able to do this, but through my own due diligence and through my own ability to create a daily process for myself, and by creating my own sort of way of doing things, I think that is what led me to fill in some gaps and become profitable. And that is what I'm going over, or about to go over, here in a second. Very well, very easy to get and digest the whole thing. Bless, appreciate you. Shadera, welcome. Ackman, I appreciate that. I wouldn't say perfect. I always want to try and stay humble, or else I will probably get checked, you know. All right, let's get into the next topic. Let's go back and we'll start doing some more back testing. I could even close my eyes. We'll just go pick a week. Oh, there we go. This looks nice. So we'll go over here to Monday and we'll repeat the same exact process. And I can already tell I'm not going to like this week because of this candle right here, this huge spiking candle. All right, but Friday, process remains the same. Friday's range coming into Monday is important. The previous week's high and the previous week's levels are important. So if we look at Friday, Monday, Friday breaks out of Friday's high. Actually, I think I just said that weird. Monday breaks out of Friday's high, and then Monday creates the opening range for the day and for the week. Oh, boy. There we go, like this. And you can see on Tuesday that this is turned into a failed breakout. And on the following day, the whole rest of the week becomes very choppy. Why does that happen? Well, this is one of the things I kind of talk about in some of my live streams whenever these ranges are created. Tuesday is the initial balance, and they've extended it like this very, very far, and the rest of the week is just on the inside. So that makes it very difficult because everything you're doing is now trading on the inside, and I think that is far more risky. If you are taking trend trades, there was an opportunity over here in the Asian session to take that trend trade continuation back down towards the low of the week, except it didn't get there. And then you have Wednesday, Thursday, and Friday. So Wednesday being that midpoint area of the week, at least it does give you a good reference for how to trade Wednesday, Thursday, and Friday, because Thursday breaks out and goes into consolidation and then fails coming back into Friday's range. And then you can see that the market had that failed breakout over the course of 2 days, and now it is trending back up towards the high. But the thing is, this is a massive manipulation tactic. So whenever I see this, I try to kind of avoid those. So let's go back one more week, and we'll just look and see what kind of template this one turned out to be. Again, Friday's high and low. Monday breaks out and creates the opening range, but we might be in some kind of breakout scenario. This looks very similar to a lot of the templates from last week. So Monday, opening range, Monday's high and low. We broke out of the previous week's high on that Monday. So a previous week's level has been triggered, and then it continues to trail higher and higher. Tuesday is another confirmed breakout, a close outside of the opening range. Coming back to this slide, market close on the outside of the opening range on a Tuesday. Probability of Wednesday continuation increases. So now I am looking for signs and symptoms of that. So we can go back to the charts and we can look at the smaller rectangle that has formed, breakout, pullback, consolidation. This is actually like a little inverse head and shoulders. So we can actually go and look and see on this Wednesday, was there a good buy low opportunity that we could have taken? So we'll go like this, and how far back are we? September of 23. That is probably going to make me have to use the two. Dang, September 23. Oh boy, what was that date? Who could tell me what date that was? It was September of 20. It was September of 23. Oh no, I've lost it. Losing my mind. All right, let's see if I can find that again. Goodness gracious. It wouldn't be a Pips to Profit stream without technical difficulties. There we go. So September of 23. Fantastic. Let's go back to here. That is one thing I wish TradingView would, I'm not going to say fix, but just make a little bit more user-friendly. Is if I screw up the time frame, don't make me start all the way back to the beginning. All right, I'll go to the 5-minute time frame so that I can have good data here. Okay, now I'm going to put my session windows up there. So I'm coming into the day already believing that it is a buy low of day opportunity. We had that rectangle already identified on that 1-hour chart. The 5-minute has come down and put a peak formation low in, but then they make a higher high. So this is my reference points for levels. High and then a low down here. So this trade or this move back down into the low, you can see the big drives back down into the low, breakout, pullback. now we're coming back to what we talked about in the beginning of the stream, understanding structure. They make a lower low, then they make a higher high, and then coming back into the third hour of the London session. Third hour of the London session, if it would pull up. Oh, no. Very well. I'm going to have to... there we go. There we go. This is because of the central time or whatever. There we go. 3 pushes back down into the low of the current session. So drive 1, first hour of the session opens up right here, 2 o'clock. Then you have 3 o'clock over here. And then you have 4 o'clock over here. And this is where time rotations and structure and all those things is going to be very important. There is our pattern. Push 1, first hour. Push 2, second hour. Third hour opens up. Push 3, down into the low. And then you get the down, up, down engulfment. So remember at the beginning of the stream when I talked about when you get these W's that are shortened, those are a lot of times going to be the ones that turn into, ascending triangles and things like that. So there is our neckline. There is the ascending triangle, and there is the engulfment of that neckline. Now, this is down on a 5-minute chart. Like I said, I take my entries on a 1 minute. I wish TradingView would give me more analytical data, but I'm working with what I've got here. So people that were asking me about why would you take this trade? Well, remember, the thesis or the idea was that we are in breakout mode. Tuesday was a breakout. We are looking for a buy low opportunity. We already have a lower low and then a higher high leading into London and a pullback into the third hour for that continuation. And then we are trading from the inside to get back to the outside. That is a trend trade in the direction of the already moving or pre-existing breakout mode, breakout moving market, right? So this was the high of Tuesday. Like I said, we are trading a trend trade from the inside to get back to the outside of the range, right? And then in New York, they have the breakout, the pullback, and they give you the same exact pattern again. Look at how wild this consolidation is, and then there is the parabolic trend trade pattern. Peak high, here we go. Look at this. Consolidation before the session begins, right there. Peak formation high first. Peak formation low, clearing the board. All right. Peak formation high first, breakout traders in the market. Peak formation low, hitting stops on people that got the direction right, but they have timed the trade wrong. Pulls back into consolidation and goes into the parabolic trend trade channel, the little pattern right here, and then goes vertical again in the direction of the already existing, pre-existing opening range breakout. And again, this is probably now turned into some kind of range expansion of the opening range and initial balance for the day. And you can see one level of rise, and then there's the second full expansion outside of that breakout. So in direction or in line with the pre-existing trend once again. Let's go back to the 1 hour chart. How's everybody feeling? Is everybody feeling like, man, this is either blowing my mind, or you feel like you're getting something out of it, or do you feel like you're getting absolutely nothing out of it? Is it possible to put on the chart time frame you are explaining? Hey, up in the left-hand corner. It says it right there. I know it's a bit tough, but this is gold cam. Okay, good. Because I do feel like I'm rambling a bit and then not getting feedback from you all. I'm not asking you all to like blow smoke or anything like that. It's just kind of hard as a teacher to be talking and not be able to see people's faces, because I have no idea if I'm just rambling and you all are getting it, or if I'm rambling and nobody's understanding a word I'm saying. So I just want to make sure this is all being well received, and I'm going to continue now. All right, so you can start to see how the thesis is starting to develop. We're either looking for a trend trade from the inside back to the outside in the existing already moving direction. I'm not looking to take a trend trade from the inside as a counter trend trade. That would be silly. One of the things that I do talk about that I did not learn from anywhere, and I'm not going to say I've made it up, but the way that I view a pullback, is from a market maker style of thinking. All right. This isn't like smart money or anything like that. I just assigned sort of a designation to what the market's trying to do in a pullback in order for me to better understand and look for the signs and symptoms of a pullback so I don't get caught trying to trade into an extreme. So the purpose of a pullback, whenever a higher high is made or whenever they go into some kind of pullback, what is the market's goal? What are they trying to accomplish? Number one, in that pullback, they're going to stop out traders who have the direction correct, but have timed it wrong. Boy, that could not have gone further off of the screen. Why? Oh, text wrap. Nice. Okay, there we go. So they're going to stop out traders who have the direction right, but they have timed the trade wrong. Number two, they are going to induce the wrong side of the trade. So induce other side. Let's say the market wants to go up. We're in an uptrend. They're going to make it look and make it appear as if the market could continue to go lower. So induce other side of the market. And then finally, they are going to shake out profitable traders. And number three and number one kind of come into, they kind of go together, right? They are going to put patterns up on the screen in order to shake you out. The market's going long, but they are going to stop hunt down low in a way and in a fashion that would scare you. It basically appeals to your emotion and makes you close a otherwise profitable trade at a small loss or at break even. All right, so shake out profitable trades. Okay, so how many times have you been in a profitable trade and they make a higher high and they start to stop hunt back down and you close that trade having, they come back down maybe 20 or so pips, you close the trade and then it goes another 50 or 100 pips and you're like, dang, that stinks. This is exactly what I'm talking about. Shaking out your profitable trade in a way that makes you want to close. So anytime we get a pullback and we start looking for trade setups, we are in a pre-existing breakout mode. They are going higher. They are breaking out of consolidations and making higher highs and higher lows. Look at the way that they pull back on this 1 hour chart. Some of the biggest down close candles you have ever seen in your entire life, and they don't go anywhere. So breakout, pull back, rectangle, continue to trend. Once again, they do the same thing. Small candle, down close, doesn't really get my attention. But the next candle definitely gets people to start selling. And that candle, the biggest down close candle that there is the one that reverses almost immediately. And now we have traders trapped in that second push. And if you want to learn more about three pushes and all the different variations and how I use it, please go check out those videos because I'm not going to confuse everyone in this webinar. Excuse me. But so now we're in breakout mode once again. And again, we already went through this template. Let's see if we can find another profitable trade. So Wednesday's closing or midpoint range of the week, right? High and low, something like this. Again, Stacey's topics, not mine. But 3-day templates and things like that. Wednesday, Thursday, inside day, Friday, that is a template. Because again, now we have the midpoint range of the week, breakout, pull back. They go out of balance. They go below Wednesday's low. In the London session, London's equity market opens up on the outside, giant pin hammer, and then it begins to go vertical back up. We are going from the new out of balance, low of the week, back towards the high of the week. Okay, so this rectangle at the beginning of the New York session, all the way through towards the end of the New York session. And again, if you're trying to trade this short in a downwards moving market, this is a breakout pullback and then continuation. They've came off the low of the day, gone into consolidation, and then you can see where they kind of tried to continue back up. This is a very dangerous template to try and go short because you're in a opening range breakout. And you can actually see what they've done here. This is the opening range high, opening range breakout, pullback outside of this inside bar. The breakout failed coming into the New York session. So if a breakout fails coming into a session, the breakout has failed. coming back to what we were talking about at the beginning of this video, they are reaching now maybe for the other side of the day or the other side of the week. They're going back towards the high of the week to continue the trend. It's a really good way to look at it. All right, so understanding these levels and knowing these levels will genuinely help you from getting caught trying to trade low-hanging fruit that isn't really a low-hanging fruit. You think it's a big down close day, or it could become a big down close day, but it's a large expanding breakout sort of week, and you're trying to counter trend something all week long that just does not make sense. Let's look at this template Friday, and I should probably go to a different pair here soon to appeal to everyone. Yes, Gazo, we've arrived. The rectangle you described, that's why you always draw your end of day consolidation. Yes. Yes. Yes, yes. And it's been very difficult for me to describe that and explain that without making this webinar. Because I keep on saying things about structure, and then people ask me, well, then why does the end of day consolidation matter? And I just stare at them blankly because I'm not explaining it properly. In my own head, it makes sense, but to everyone else, it didn't. So hopefully this is going to help with that as well. So on Friday, again, closing range, coming into the new day, Friday's range and the previous week's high is our reference point for the new week. This was the previous week's high on Friday. Monday has a failed breakout or attempts to go higher and then comes back down on the inside of the range. But Monday is the opening range for the week. Tuesday goes vertical through the high of Monday and opens up the New York session on the outside of the range. It opens up out of balance and then wants to find value. It has to come back down to find that value and trades back down towards the closing range, the Friday's low from last week. You also have this nice rectangle on Monday as a good reference because that is the opening range for the week. And then they break out on Tuesday, pull back on Wednesday, back up into the high, and then again, they come back into the range, and then from the inside of the range, back to the outside of the range over here. Tuesday is the initial balance. So on Wednesday, what are my important levels? What areas of the chart do I want to be looking at? I am looking at Tuesday's low. I am looking for trend trades in an already existing breaking down market for a trend trade from the inside. I'm going to fix this. There we go. From the inside, Tuesday, right? They've extended the range on both sides. I'm taking a trend trade from the inside of a consolidation back to the outside of the consolidation as a trend trade. All right, this is a pump for a consolidation and a dump, and then they go to the outside. They go to the outside, and now they opened. I don't know if they opened 930 out of balance. Let's go look. But regardless, at some point in the session, the market is out of balance. They've gone outside of the initial balance, and it wants to come back in and find value. There's the rectangle. There is the shortened W once again. The big drive into the low. This is a 5-minute chart. There is 930s open right there. And if you ever watched, actually my live stream last night, I talked about time engulfments. The opening price of 930, drive into the low. I'm going to skip these ads for you all. Drive into the low, pumps back up, 1, 2, 3 back to the low. There's the engulfment of the shortened W, ascending triangle. And then you can see what follows afterwards. I think the better trade was probably at the beginning of the session for the collapse back down from inside back to the outside. But if you trade outside of the window and you want to watch this go back up towards the high, then it is what it is. Oh boy, we got some questions now. Let's see here. Do you use Wednesday through Friday templates like Monday opening range, but instead Wednesday will be... Okay, so no. Opening range goes through the entire week. All right. Initial balance goes through mostly till Wednesday. Wednesday midpoint will help you. It will assist you for Wednesday, Thursday, and Friday. And then Friday's range will assist you on Monday. And then Monday's range forms, and that will assist you on Tuesday. And Wednesday, Tuesday's range will form, and that will be your overall guidance for Wednesday. And that same process just repeats over and over and over again. Trend trade from the inside back to the outside, or reversal trade once they go out of balance, back from the outside back to the inside. Process repeats over and over and over again. And everything else about me, like the aspects that I use to help me find more accurate trading decisions, if you want all of those little nuances, those little details about time engulfment, about using the 100 pip box, that's another thing that, of course, I learned from Stacey, but I had my own twist with it to, in my opinion, make it more accurate and more usable. That was just for my own personal use. The 3 pushes, templates, and things like that, I have all of those on my channel. But yes, you can use, where's it at? Nope. Okay, tips and tricks. All of these, like, these are kind of lengthy descriptions of these, but these are my trading setups. These are the setups. These are the ones that I'm looking for. I've just categorized them and shown exactly what the probabilities or what I'm looking for based off of the scenarios of the opening range that I can look for. And then all of those understandings that I've been talking about throughout this webinar is how I actually accomplish that. All right, Gaza, the rectangles you described, yes. Gordy D, you're welcome. Session breaks. Training view, right click. Okay, good stuff. Cam, can you please tell the timing adjustment indicator? Hey, so we are currently, I'm going to go back to here. Notice how if I fast forward this back to current present price and time, I'm on Eastern Central Time in the United States. Notice how this starts at 7 o'clock. That's not correct. So I need to uncheck this box to reflect. It is currently 10:31 a.m. right now in the Eastern Coast or the East Coast of America. That is the 8 o'clock open right there. So if you uncheck that box right now, it will give you the accurate times. Or if you're really worried about it, just go here and click on New York, and that will give you the best. Cam, please tell timings. Cam, please tell timing. Okay, you just spam that multiple times. Good stuff. Come, guys. This is good goal. Give Cam some likes. I appreciate that, Gazo. Tuesday, they pull back. Friday is closed price. Yep. I'm not even going to go into opening price and closing price today because that's just going to confuse. I'm trying to stay with the basics today and not get too ahead of myself. All right. Thank you so much. Good stuff. Hey, Cam deserves every bit of it. I appreciate that. I have been always confused with 3 pushes out of opening range. Please clarify. 3 pushes outside of the opening range. All right. So, in general, 3 pushes. So let's just refer to that specific setup real quick. Within an opening range breakout, you can still have good opportunities on Thursday or Friday. More importantly, if you have multiple weeks of breakouts, right? So if I have week 1, week 2, week 3 of breakouts in the market, let's go and look at something like this. All right, so if I have multiple weeks of breakouts, and then a week of breakouts, my probability of success finding that 3 pushes outside of the opening range setup goes up. I want to find markets that are strongly or have been going up for a very long time. They're overextended. All right, I want to say that first before I explain this. With that being said, whenever you have the opening range on Monday, the way that I gauge the quote-unquote pushes outside of the opening range, I use the previous day's highs and the previous day's lows. So there's the opening range for the week. Wednesday was the first day that they went higher. The day closed over here, but this gives me a reference point for the next day. Now I have 2 pushes outside of the opening range. Never got the setup. I didn't get 3 days of breakouts or 3 pushes outside of the opening range. All right, so let's go back over here. Tuesday, we didn't have. This is a holiday week, so there was no Monday, which is fine. But we have a Tuesday. Wednesday went higher. They broke out. Okay, so opening range breakout, buy low opportunities on Thursday. Fantastic. But that also gives us a reference point for the first day of, or first push outside of the opening range. Thursday attempts to go higher again, and it succeeds. So we're still in breakout mode. Push 2 outside of the opening range. Then we have Friday. Push 3 outside of the opening range on a Friday, and also 3 peaks outside of the opening range. Big, huge move back down on that Friday for the 3 pushes outside of the opening range. The market has also opened up outside of balance or out of balance, right, on that Friday after 3 pushes outside the opening range. all those different things, back down to just about the breakout level from Wednesday. So they came back down to stop out those traders from Wednesday's breakout. But that is how I gauge 3 pushes outside the opening range. I'm using the previous day's levels, and I'm looking for markets that are already up high with pre-existing 2 to 3 weeks of breakouts. All right. So we've been talking a lot about weekly templates. We've talked about structure and things like that. So I want you to compartmentalize all that information. Just separate it. Use that completely separate from what I'm about to tell you. And then once you have been capable of separating the two and you understand both of them at 100%, you're good with both, then you can combine them and it will help you. All right. Let's talk about first red and first green days. First red day is not just any down close day. Stacey says that. I have said that a lot of times, and there's so much confusion for whatever reason about it, because maybe I've misexplained it or it's just been misexplained before in the past and it was taken out of context or whatever. I don't know. However, let's talk about it now. First red and first green day. I like to think of first red day as a math equation. All right. A plus B equals C. You can't have C without A plus B. Some of the preferences. I want to see multiple days of breakouts before I get a first red or a first green day. For a first red day to occur, I want to have the market be going in a direction for multiple days or multiple weeks, and then I get a first red day. A plus B equals C. Market has been going in breakout mode for multiple days. Breakouts, breakouts, and breakouts. Okay, so that fits the first part of the criteria. Number 2, I need a day that goes vertical, and that is going to give me A. All right, A plus B equals C. That is the behavior for day A. Man, why is it doing this? Is it because of this? Very well. All right, so A plus B. I have a day that has gone vertical, and that is where the pump could have began. So maybe from around over here. Then on day B, I need a day that attempts to make a higher high first and then closes below the opening price for that day. So this is the open for the day right here. Remember I said dotted line, that's the beginning of my day. That was the opening price. They attempted to go higher first, and then it failed and came back down and made that close below the opening price. So A plus B. I have multiple days of breakouts, a day that has gone vertical. Basically, I consider that a large pumping day. So you say something like this. And then you have B, the behavior of a first red day. And on the following day, you can look for the end of day consolidation, kind of like Gazzo pointed out. And you can look for the end of day consolidation, the rectangle. And as they break down outside of that rectangle and continue to make lower lows and lower highs, you can continue to look for trend trades back towards the extreme. So in this case, you have a first red day. This is your closing range from last week. You're taking a first red day trade, a trend trade, back down through the low of that range. That would be the trade. All right, A plus B equals C. Pump day, first red day, trading day. You can't get your trading day without the previous behavior from A and B. Okay, so that's a first red day. Now, if I were to take this and I would say, hey, flip this over, and we've been going down for multiple days. I just replace a few different words. We now have multiple days of dump, a day that has attempted to go lower first and closed above the open. I have my end of day consolidation. They continue to break out higher highs and higher lows, and I'm taking a first red day, buy low opportunity, trend day, trend trade back through the extremes. That's it. That's the trade. That's it. Low of day, low of session. You can kind of see the little parabolic channel down here, down low, where they pulled back and then went vertical back. I understand this chart's inverted. Back up through the high if it was a first green day, or back down through the low if it was a first red day. That's it. That's the trade. And then the weekly template continues to play out. The same process applies over again. Just because this day was a down day does not mean that tomorrow will be as well, because the process repeats. We have Friday's closing range, we have Monday opening range, and then we have Tuesday, once again, becoming a failed breakout at the low of the current week, and start to make higher highs and higher lows, breaking out of consolidations and things like that. All right. Boom. All right, inside days. There's always a lot of confusion about inside days. If you haven't noticed, I have shifted gears. We were talking about weekly templates, and I'm now explaining and talking about signal days and what to look for within those signal days. All right, so how do I identify a inside day? Notice that Tuesday's range, this dotted line, the horizontal dotted line, that is the previous day's high and the previous day's low. They have traded completely on the inside of that range. They have not hit either the previous day's high or the previous day's low, not even with a wick. Not even with a wick. That is an inside day. That is a signal to look at this weekly template for the next day. That's what it is, all right? Because the idea of these inside bars is that this inside day is a consolidation. And if they start to break out of a rectangle, out of a box, the market is either going to break out, pull back and continue, or break out and fail, come back into the range, and go back towards maybe the high of the week or something like that. These inside bars, you can actually find them on lower time frames and just study the behavior. You could go down to a 1-minute chart and identify the behavior on it. I'm not saying to use this for actual trades. I am just referring to the behavior of inside bars in general. If you go to a 1-minute chart and you study the behavior of inside bars, the same exact behavior that you get on a 1-minute chart also occurs on a higher time frame, which is the daily chart. Oh, why am I having a hard... There's an inside bar, right? So inside bar, they break out and they begin to trend outside of that inside bar. Then you get an inside bar down here. They hit the low first of that inside bar and they go back for the high. Then they come back and begin to trend lower. Then you get... Need to find another inside bar. I think that's an inside... Yeah. Then you get an inside bar. They hit the low first and then go back for the high. That same exact behavior is found on your daily charts. If I were to show you a daily chart and just cover this up, you would have no idea what time frame I was looking at. The same behavior happens on a daily chart. So whenever you see a weekly template where you get an inside bar, the question you should be asking yourself is, where are people trapped? What is the weekly template? And is this inside bar going to turn into a breakout pullback, and a trend move outside for a continuation, which is exactly the trade that I took on Friday on US dollar Japanese yen. This consolidation at the low of the day, they're breaking out of smaller rectangles. We have this large ascending triangle. They have volume trapped at the low of the current week. I was looking for a trend trade back from the inside to go back towards the outside up here from Wednesday. All right, Wednesday's high, which was great. So, inside days, breakout, pullback, continue, range expansion of that inside bar, or breakout and fail and go back to the other side of the range. All right. 3 days of breakouts. You're starting to probably notice a very similar trend. 3 days of breakouts, 3 days of this, 3 days of that, 3 weeks of this, 3 weeks of that. 3 days of breakouts is a signal to look on the next day for maybe some sort of reversal. Whenever I have 3 days of breakouts, the very first thing I'm looking at is structure. And I'm going to do that on the 1 minute or on the 15-minute chart. If I have 3 days of breakouts in one direction, breakouts, do I just automatically believe on the following day that I am going to sell? Absolutely not, because this is exactly what happens when you do that. I just assume, hey, I'm going to sell, and then this happens. Okay, so one of the things that I look for when I have 3 days of breakouts is higher high, lower low. So if they would have came down and made a lower low, that would be my indication to maybe look at this trade. All right, the higher high and then the lower low. Stacey would call that a lower low on the inside, and then you could look for a pump and a dump sort of setup. And if I were to flip this chart over, 3 days of breakouts in the downwards direction, and then a lower low, higher high, I would look for the dump for the pump to follow. If I don't get that, then it's just not a setup that I want to take. Or it could be a signal to watch it later in the week. Whew, boy, I think I have made it through all of the basics. We've talked about signal days. We have talked about opening range and initial balance, the important levels, structure, rectangles, breakouts. What days when it breaks both the high and the low, please, Josh? Hey, that's a day 0. All right, so I've made it through a lot of the basics, and I've got about 15 minutes left before I feel like I have made it for way too long in this video. I wanted to make this webinar about 2 hours long, and I do have a few slideshows that I would like to go through with you all to talk about the 2 patterns that I like to see. Okay, so I'm actually going to get rid of these. Yep, and rid of that one. And then I'm going to pull up the day 0 slideshow. I'm going to see if I can't do this in good time without going too fast and talking my way into a pit. All right, so when I take trades, now we are talking more about specifics, right? I talked about the basics, structure, timing, what levels I find important, trend trades or reversals. I'm either taking a trend trade in the direction of the trend from the inside back to the outside, or I'm letting the market open up on the outside or out of balance and allowing it to want to find value and come back into the range, looking for consolidations, failed breakouts, and things like that from the low and the high of the current day. But whenever those scenarios happen, what patterns do I look for in order for me to get into the market? One of the patterns that I look for is a parabolic trend trade pattern. The larger the pattern, the larger the move. Just because this one has developed over the course of 3 days does not mean it has to develop over the course of 3 days. This pattern could show up over the course of 3 sessions. It could show up over the course of 3 hours. And then it could, or even 2 hours, right? You get a large dump, and then in the second hour, they put in a low, peak formation high, peak formation low, second hour trades back down into the low, and then goes vertical, right? And we're going to see some examples of that here in a second. But peak formation low, valley low on one day, and you have a big peak formation high on the following day. Consolidation in the middle, structure, lower rectangle that breaks out and consolidates and then starts to ascend into a parabolic channel to go vertical. So if I were to reference this as a parabolic trend trade, I am actually referencing the pattern. Consolidation, spike the high, spike the low, pull back inside, go into consolidation, and then get this ascending channel. That's one way that I can use to get into the market, is observing this pattern, because this is a parabolic pattern. The next pattern that I can look for is a short squeeze or a long squeeze setup. And this one is simply, this pattern alone, again, can develop over the course of 2 to 3 days. Starting to see that pattern, right? Over the course of 2 to 3 days, we're making lower lows and lower highs. And then we get a lower low on one day, a dumping day. And then on the next day, we get a higher high, a break in structure day. And then on the third day, you have a day that dumps back down into the low and then goes into consolidation, structure, rectangles, and then goes vertical in the New York session, back through, hopefully, the high of the previous day, and expands, hopefully, up through that high. So that is a 3-day sort of short squeeze. But again, you can use this pattern. It does not have to take place over the course of 2 to 3 days. It could take place over 2 to 3 sessions, especially if you're opening up like out of balance or something like that. You can get these kind of patterns. A long squeeze trade is just flipped over. We have 2 to 3 days of up. We get a lower low and 3 pushes back into the high. Rectangle, right? Lower high, consolidation, M, it breaks down. Now we have a long squeeze pattern. This is a short squeeze, the higher low. This is the lower high for those types of patterns. Okay, here's some examples. I've got pictures down here of what to kind of think about or try to visualize the patterns, right? You have a dump day, a lower low, and then a break in structure, higher high day, consolidation. They come out of consolidation, push 1, push 2, push 3 into the low. And then you could see the little W down low, down, up, down, and then the engulfment in the New York session. Look what time it is. All right, so that one is set up perfectly. All right, lower low, higher high. Again, same exact pattern. You can see all these different examples of that sort of pattern. Now, day 0. Day 0 is not a day 1, 2, or 3. It's not really anything. I keep calling it the heartbeat pattern. You'll hear me refer to it as a heartbeat pattern because it looks like a heartbeat monitor. Think about having a pulse, right? A day that has gone into consolidation and then spiked the previous day's high and then spiked the previous day's low and pulled back inside and gone into consolidation. This scenario right here is what I would consider day 0. And you can actually see this was a Tuesday. So Monday, Tuesday, this is, if you look at my tips and tricks slide or rewind this video, this is one of the weekly template scenarios that I look for. Monday, opening range. Tuesday, spikes both sides of the range. Wednesday, pulls back on the inside, and you get a short squeeze setup from the low of the day. There's the rectangle. There's the consolidation. Back up from the inside. Trend trade from the inside back towards the outside. Back towards the outside. Previous week's high. All right. Another day 0. Yep, there we go. So there's another day 0 example. I've just drawn it with this really super fancy line. Here we go again. Monday, Tuesday. Monday, consolidated. Tuesday, spikes the high. Pulls back down, spikes the low, pulls back into consolidation. There's the rectangle. From that rectangle, continues to break out, and there's that parabolic curvature pattern to go vertical. And if I go back and reference that first picture that I had, this is just from Google Images. This is it. Spike the high, spike the low, consolidation, rectangle, splits the range, and goes into the parabolic pattern and goes vertical. Base 1, 2, 3, and 4. All right. So why am I going over this? It's because those are the two patterns that allow me to get into the market. Those are the two patterns that I'm searching for. I am looking for 3-day larger opportunities over the course of 3 days, based off of signal days in combination with the weekly templates. But overall, just if you want to really truly simplify things, just look at the opening range. It's either a trend trade back in the direction of the current breakout, or it is a reversal. Once you get to the outside of the range and you're on the outside of the opening range and initial balance, you can start to look for those types of trades as well. All right. Does A plus B equals C have to occur during a 3-day setup, or can it skip a day where C can occur 2 days later? Hey, so yeah, that's a good point. Let's go back to the chart. Sometimes you get a signal day and you're up high and you get like a first red day or something, and it doesn't eventuate for a couple of days. That is fine. Just keep watching the pair. All right. Wait and be patient. Maybe they need to do some more work at the high first before it goes vertical. But yes, there can be pauses in there before the move actually eventuates. Maybe, you get this huge consolidation up high. Now, I know this didn't fully break down, but it did eventually. But you get this big consolidation up high. This was the break. This was the break in structure. So now we actually have the lower low, right? Because this was that 3 days of breakouts to the high example, and you're like, okay, it still hasn't done whatever. New week opens up, makes that lower low. After 3 days, maybe 3 weeks of breakouts, there's the rectangle. It trades back to the high of the rectangle, and that's the rollover. So this is the lower low break in structure. That's the trade back into the high to clear the board. And then on the following day, that's when the move actually began. Yeah, so you can see the end of day consolidation over here. And how at the beginning of the day, that's where it starts the move. Goes back into consolidation and continues to break out of those rectangles, the horizontal structure, over and over and over again, all the way down through the New York session. Back from the outside on Tuesday, pulls back to the inside, because remember, Monday was the opening range. Tuesday went to the outside. Wednesday pulled back to the inside, started making lower lows and lower highs, and this is a trend trade from the inside back again to the outside. Until it makes a lower low on the inside. Yes. Yeah, exactly. Well, the lower low on the inside just helps me gauge the 3 days of breakouts. So, like, if I have 3 days of breakouts to the upside, I want the lower low back down on the inside to give me that pump and dump setup, is what I'm trying to say. Because I don't want to just see 3 days of breakouts and try to go short the next day. So this was like my way of trying to gauge when is the most appropriate time. All right. This is it, ladies and gentlemen. I've got about 6 minutes left in the stream. Somehow the Lord has been gracious enough to allow me to make it through 2 hours of speaking without stopping. Not that it was really that difficult, but Does anybody have any further questions, comments, concerns about what I've talked about today? Have I confused anyone to a point where you need me to explain something? Or maybe you had a good understanding and then I've said something today that made you confused. Now's the time to ask. So is that Tuesday a day zero? Spiked the high, spiked the low, and pulled back on the say. Yes, yes it is. Good observation. Monday's range, opening range. Tuesday spiked the low and spiked the high. Didn't quite pull on the inside of Monday's range, but yeah. Need to know where to get the slides. Joshua, you've done the webinar. It was all part of that webinar bundle. I mostly free-handed today because I actually wanted to go through live charts with everyone. But those slides that I showed you, these are all the slideshows from my videos and from the webinar, from the seminar bundle. If you look at parabolic capitulating move, short squeeze, and day zero, they're all in there. Please, Cam, tell the time adjustments and indicator one more time. Yep, sure thing. All right. If you go to your pips to profit indicator, make sure you're on UTC5. That'll give you New York time. It'll make things a lot simpler for you. Oh. Go pull up your indicator, and this box, this DST box, should not be checked. It should be blank, just like this. Winston, I appreciate that. It does absolutely require a lot of discipline. Trading in general. Trading in general requires this. You could have an EMA strategy with crossovers, some kind of weird crossover strategy, and it'd still take discipline. That's why I think a lot of people blow it up. But how to get the pips to profit indicator? It's free. Number one, I want to emphasize that. It's only on my Discord channel because the gentleman who made it doesn't have the account to allow it onto TradingView. You can't just type in P2P. So just click on the link in the description of this video, go to Discord, and then you can download it for free. It's in the indicators channel. All you have to do is click on the link, scroll all the way down, add to your favorites, and then go back to your indicators and click P2P, add it to your charts, and you'll be good. Sorry, I didn't see you, not your average brain, earlier asking the question. My apologies. All right, ladies and gentlemen, this has been a fantastic stream. Thank you all so much for being here. I do hope that maybe this has helped clear up some confusion for you all, or at the very least, giving you some good levels to trade from going into the weeks ahead. Combining the weekly templates, understanding the opening range and initial balance, trading from the inside back to the outside, rectangular structures, the timing windows, looking at what levels are important from Friday, what day is important, Monday, and then Monday's range for Tuesday, Monday, Tuesday for Wednesday, Wednesday for Thursday and Friday, and then the process all starts over once again. Ladies and gentlemen, thank you all so much for being here. You have a great rest of your weekend, and I will see you in the next stream. Bye-bye.